Hi, welcome to the Expats Portugal webinar, Understanding Cryptocurrency in Portugal. A little bit different tonight. We'll be looking at the headline subjects of taxation around cryptocurrency, investing and the legal framework. And on that note, this isn't investment advice, by the way. This is for educational purposes that we'll be having a presentation from two gentlemen who are cryptocurrency and Bitcoin enthusiast, Pedro Franco and Tiago Borges, who's starting for us this evening. Some of the subjects that we'll cover, and you can, given that you're an Expats Portugal member and you're here watching it and commenting live, you can steer this conversation and ask the questions you want to ask. And of course, after we finish recording, you can ask more personal questions as well. But some of the subjects we may talk about tonight: how to trade crypto, what different types of crypto there are in the marketplace, crypto versus traditional financial instruments, which I think will be a particularly interesting part of the conversation tonight. Why is crypto a good investment? We'll get opinions on that from Tiago and Pedro. What is Bitcoin and why it has value? What is Ethereum also? We'll touch on that. Resources to learn more about crypto. So you'll be given some homework, I think, this evening. Is Portugal a tax haven for crypto, which some believe it to be? We'll find out for sure tonight. And what are the taxation rules if it is a tax haven here in Portugal this evening? So some of the points there, suggest others by all means. And let's go to Tiago now and say good evening to you, Tiago. Good to meet you and good to have you here this evening.
Okay, thank you. So I'm going to jump in and going to try to explain you a bit about my profile, just to give you a headlight. So I'm a computer science engineer. I graduated in 1995, and I start my first startup in 2000 as a tech entrepreneur. I did my MBA in 2009. And then I sold my company to Verizon in 2016 in September. So that moment was very important for me because that was when I started doing investment. And I think like many other people, I started investing in real estate because it's kind of, you see the property, you feel it, it's kind of more easy to understand. The second thing I started investing was in financial markets, mainly in stocks and mainly in the US stocks, because I'm based in Portugal. So I have all my real estate in Portugal, and I want to have some diversification because of risk. So I want to have some assets outside of Portugal, outside of Europe. So I started investing in financial markets in the US. And then in 2020, when COVID started, because we had a lot of time, I started studying cryptocurrency and mainly Bitcoin, and I started to be very interested in Bitcoin. So just to give you this very little overview, so how I found Bitcoin. And the challenge for this webinar was about why to invest in crypto. And before we start to understand how to invest in crypto, I think it's very important to understand why we should invest in Bitcoin, okay? And like it was said before, this is not financial advisement, but it's my perspective, my individual perspective for studying Bitcoin for many hundreds of hours, okay? So the first thing I want to share with you that unfortunately many people don't understand is to share with you where does money come from, okay? So let me put here. So majority of the money is coming from central banks. So central banks can create money like the Fed in the US or the ECB in Europe. So they can create money and lend it to governments or to financial institutions that are in distress when there are some crises, for example. The other part is commercial banks. So commercial banks have a license from the central banks that each commercial bank can create up to 10 times more money of what they have in their accounts, okay? So when we go to the bank and we ask for 200,000 euros to buy a property, that money did not exist before we got the loan, okay? So when we get a loan from the bank, it's not money from other people that is given to me, is new money that is created to me, okay? And like the majority of you know, the amount of debt is always increasing. So if you see the debt from the governments, it's increasing every year. The debt from the businesses is increasing every year. And the debt from individuals is increasing every year. So all the debt is new money that is being created. Okay. So there is a way to measure this money supply. So just as a reference, I use the last 20 years because it's a period that we were all born in and we understand. And I want to challenge you to try to guess how much money was created over the last 20 years. And we are starting with the US dollar. But if we go to the euro, euro started in the year 2001. It's very similar, the money creation, it's very, very similar. So M2 is how the US measure the money creation. And if you see here, in June 2004, there was $6.2 trillion of existing money. And today, in June 2024, there is 21 trillion. So when you go from 6 trillion to 21 trillion in 20 years, this is a growth of 235%. And 235% is a big number. So keep in mind that this is 6.3% of compound annual growth rate. So 6.3% compound growth over these 20 years gets you from 6.2 trillion to 21 trillion. I found this very recently, about 3 years ago, I found about this. And when I talk with my friends and with people, majority of the people don't know this information. That is really important because this is like the water in the sea. So if the water is rising, all the boats will rise. So every assets will grow in value because the money is growing, the quantity of money is growing. Okay? And you can see on this graph, if you go back to the 60s, you will see this. Money is doubling on average every 10 years. So every 10 years, the money will double on average. So just before we go into Bitcoin and crypto, I want to give you this perspective about real estate and stocks. And I want to give you this perspective about how much did real estate and stocks grow over the past 20 years. So for real estate, on average, in the US, so I'm using this for the US, but in Europe, the values are very similar. The compounded annual growth rate was 4%. But you know that when you are investing in real estate, you also get some cash flow that is generated by the rental income. On average, could be 3 to 4% before taxes. And if you go to the stock exchange, so the main index for the American stock exchange, that is S&P 500, over the last 20 years, it grew 7.2% annual, so annual compound. So this means that if you invest $1,000 in 2004, this amount would double in 10 years, and it would double again in the other 10 years. So for $1,000, you would have $4,000 20 years after, okay? And the big question here is, taking in consideration that this the existence of this monetary inflation, so the US dollar is being debased 6.3% per year, so the quantity of money is increasing 6% per year. It's the real estate and stocks that are growing, or it's the value of the US dollar that is reducing in value, okay? So my answer is, it's a bit shocking, but it's about cash is trash. So if you keep cash, cash is continually devaluating because of the amount of new cash that is created every year. And the answer should be to invest in good assets. And good assets could be real estate, could be SP 500, and could be crypto. So, okay. So coming to crypto, to have this context, what makes Bitcoin special? So before we go to crypto, we are going to focus on Bitcoin. And the first interesting thing about Bitcoin is in 2009, the person that invented Bitcoin before, he invented blockchain. And blockchain was the first time that you can create some digital asset that is not possible to duplicate. So you can imagine that you have a digital picture and you can make 1,000 copies of the digital picture and all of them are the same. So this is not possible with Bitcoin. So each Bitcoin cannot be duplicated. And to give you an example, there is one account that Satoshi Nakamoto created back in 2009. And this account today has 1 million Bitcoins. 1 million Bitcoins is like $60 billion. And for 15 years, no one was able to enter this account. So it's like a treasure hunt. Okay, so you have this account, it's visible, everyone knows where is the account. It has 1 million Bitcoins. Each Bitcoin is valued at $6,000. So it's $60 billion. And no one is able to decode and enter there or copy or duplicate that amount, okay? It's only 15 years. So you can think that maybe in 1 year they will get it. Maybe in 10 years they will get it. Maybe in 100 years they will get it. So not going very technical on this, but it's really hard to get it. So if you go to invest in Bitcoin, you need to understand that this is something that is not possible to duplicate. So the second thing, it's about the supply. So like you saw before, the supply of US dollars today is 16 trillion. It was about 9 trillion 10 years ago, about 6 trillion 20 years ago. And you can guess how much it will be in 10 years. So from 16, it can grow to 24, 25, 26 trillion in 10 years. The difference here is with Bitcoin, you cannot produce more. So the number of Bitcoins is fixed. There will only be 21 million Bitcoins. And because of this fixed supply, the price per Bitcoin can always increase as you increase the money supply. Imagine like the value of Bitcoin is the money supply divided by 21 million Bitcoins. If the money supply increases, the value for each Bitcoin should also increase. In theory, okay? But at least you have this fixed supply. The third thing, and talking about Bitcoin is really difficult because this is a completely new type of thing. So there is nothing similar to Bitcoin before Bitcoin existed. So it's a bit difficult to explain some concepts because these concepts are completely new. They did not exist before. And one of the concepts is decentralization. So there is no one controlling Bitcoin. And this is really strange. You know, like if I have my Visa card, I know that I go to the supermarket, I pay with the Visa card, and Visa will take care of the relation between the supermarket, my bank. They will make this, okay? And they will charge a commission for that. Or everything I do, I have someone controlling it. So the incredible thing with Bitcoin is that with Bitcoin, there is no one controlling Bitcoin. So today there are hundreds of thousands of miners, and these miners, they are all using the same software, and they are maintaining the security of Bitcoin. So it's a bit of a technical thing. If you want, when we go to the question part, you can put some questions and we can go a bit more deep on this because it's a bit more technical. But what I want to keep in mind is like this decentralization. It's really important because it's the first time that you can invest in something that no one controls. Not the US government, no any corporation, anyone. So the next thing that is also very special and specific, it's about the possibility of self-custody. So self-custody is the possibility that I am my own bank. This is all a set of concepts that are very new concepts, okay? So self-custody would be something similar like I get money, notes from the bank, and I put the notes under my cushion, inside my house on my safe. So I can have my digital wallet, and I can put my Bitcoins on my digital wallet, and I own these Bitcoins. So no one else can take them from me. Okay. So when I have money in the bank, the government can take the money from me, like it happened sometimes in the past on wars and some other situations. And this is something really profound and different. But we can also go more deep on this on the questions if you have questions about this. And the last thing I want to share is about diversification. So on my portfolio, I have real estate, stocks, and cryptocurrencies. And it's really good to have cryptocurrencies that are growing about 100% per year over the last 15 years. So growing 100% per year on the past doesn't mean they will grow 100% in the future. But it's good to have on my investment portfolio assets that are not correlated, so that are independent. Okay. So the second cryptocurrency I want to share with you is Ethereum. And Ethereum, so Bitcoin started in 2009, it's about 15 years. Ethereum started in 2015, so it's now about 9 years. So these are really very new asset classes, very, very new. So you have stocks for more than 100 years. You have real estate for thousands of years. So this is really something recent. So the most interesting thing about Ethereum, so Ethereum is a cryptocurrency. It has all the properties of Bitcoin. So it has self-custody, it has decentralization, it also has a kind of maximum supply. But then Ethereum adds some more things on top of that. And the main thing that Ethereum adds is smart contracts. So smart contracts, it's again a completely new concept. So it's a concept where without any organization in the middle, I can do a contract with someone that I don't know. So let's say I'm doing a contract with someone in India that I don't know, and I'm able to borrow money from them or lend money to them. And the smart contract will control the relationship. So it's something also very profound in the way that we organize as a society, because we can do business with people that we know, or we can do business where some organization is controlling that business. Okay. So in this case, we can do business with people that we don't know, and there is a software, and the software will keep the conditions of the business. Okay, so keep in mind, we can go this on the Q&A later. Because of these smart contracts, Ethereum enabled the possibility of doing decentralized applications. So dApps are like decentralized applications. One example is decentralized finance, so where you can do borrow and lending with people that are, let me see how my battery, 7%. So we can do borrow and lending with people that we don't know. Okay. Sorry. Ethereum was also the first blockchain where we can do NFTs. So NFTs, that mean non-fungible tokens. It's a way that you can buy some digital assets. Majority of them are piece of art, and you can buy a digital asset, like a digital picture, that someone can make millions of copies, but you are the owner of that specific picture. Okay. Just to share one nice story with you. So you can imagine if you go to the Louvre Museum and you see Mona Lisa, you can guess, if I take a picture from Mona Lisa, and there are hundreds of millions of pictures from Mona Lisa taken before, when I take a picture from Mona Lisa, do I increase the value of the painting or I decrease the value of the painting? So as more people know the painting, the more value the painting will have. But there is only one person that could own the painting. And that specific painting is owned by the Louvre Museum in Paris. So this was possible with physical art, but it was not possible with digital art. And Ethereum, with the smart contracts, made it possible for the first time to do this with digital art. And you have digital art valuing tens of millions of dollars today based on this. So there are hundreds of copies, thousands of copies, but only one is signed by the author, and you can buy the one that is the original digital copy. Then you have the network effect and the community. So the value of these cryptocurrencies is very associated with the number of people that believe on it. So today, it's not an exact number, but we have about 300 million people using and owning Bitcoin. And you have about 80 million people using Ethereum. So these are the two main cryptocurrencies with a lot of people believing and using it. And this also creates value for the cryptos, the fact that many people use it. So I guess like this, for example, if you think back in 2009, there were only one or two people believing on Bitcoin. If you go to 2013, maybe you have 1 million people believing on Bitcoin. So the risk was much, much higher than it is today. So if you have something that only 1 million people believe, you have a certain risk. If you have something that 300 million people believe, the risk is much smaller. And as time goes by and more people start to know and understand how Bitcoin works, so the value will increase and the risk will decrease by these network effects by the large community. So Ethereum also has a special thing that is constant innovation and upgrades. So like I told you before, Ethereum started in 2015. And since then, the community and the programmers and the network that is around Ethereum, they made a certain upgrades that have improved the network. This does not happen on Bitcoin. Bitcoin is much more stable. It doesn't change. It doesn't upgrade. It's very stable. But Ethereum has this ability to innovate and upgrade, and this is a good thing. And last, Ethereum was recently, in a certain way, classified as an investment asset by the US, by the Security Exchange Commission in the US, because they approved 2 months ago the ETFs for Ethereum. This is really important. So the ETFs for Bitcoin were approved in January this year, and they were approved in May, June for Ethereum. And this enables institutional investors to invest on these cryptocurrencies. And these are the only two cryptocurrencies that could be invested through this mechanism, through ETFs. Also, if you want to know more, we can deep more this on the Q&A. So after talking a bit about Bitcoin and Ethereum, I wanted to share with you about other cryptocurrencies. And this is a snapshot from today, from the 10, well, you only see 9 here, but the 9 largest cryptos, and they are ranked by market cap. So Bitcoin was 1.2 trillion, 300 billion on Ethereum. Tether is a stable coin, so it will always keep the value at $1. So it's a stable coin. BNB is like a network like Ethereum. It's a smart contracts network. Solana is a smart contracts network. USDC is a stable coin. It should have the value at $1. It can vary some cents up and down. XRP, Toncoin, Dogecoin, and Tron. So these are other cryptocurrencies, but what I wanted to share with you is, especially if you are new and you are thinking about investing in crypto, you should focus on the first two. The first two are the only truly investment grade. So it's the only ones that we can recommend to invest. After these two, there's a lot of speculation. There are a lot of schemes, there are a lot of things. And also, we should not invest in anything that we don't understand and that we don't know. Okay. So I put here some references on to help you navigate this, and maybe they can share the presentation later. So there are these two very interesting books about Bitcoin, the Bitcoin Standard and the Mastering Bitcoin, where if you can read the books or you can see some videos describing the books on YouTube, you can get some more profound understanding about what is Bitcoin, why it has value, why it's so new and so revolutionary. Okay. There is also a very recent documentary. This documentary was released about a month ago. It's called God Bless Bitcoin, but it's not religious, of course. And this is a really nice documentary. They talk with about 30 people that are true believers in Bitcoin. And you can see a very good reflection about the value of Bitcoin that is quite good for beginners, for people that are starting to understand this. And you also have some YouTube channels like Altcoin Daily. They put a new video every day, 10 minutes videos that give you an overview of the market. CoinBurio is another YouTube channel that give you good overview about some topics related with cryptocurrencies. So just some references. On online news, you have CoinDesk and you have X. So much of the information we get about cryptocurrencies come from X. But I also don't recommend that you are doing some type of trading on cryptocurrencies. The best strategy is just to buy and keep to a rainy day. So just to give you this perspective, but what was the best day to sell Bitcoin? So Bitcoin exists for 15 years. What was the best day to sell Bitcoin? It was never, because Bitcoin has always grown in value. So anytime you sold Bitcoin in the past, you lost money. So it's really, you should look at crypto and Bitcoin and Ethereum, mainly on my perspective as long-term investments. So it's not so much about trading daily, weekly, things like that. And then you have some online courses. So there is a kind of a academy for Bitcoin. And I think that when you want to understand crypto, you should really start to understand Bitcoin first. That's a big challenge because Bitcoin is so much different, so much strange, so much very difficult to understand Bitcoin. So you should understand Bitcoin first, and then you can go to Ethereum, and then you can go deeper on other cryptos if you have that interest. And last, I want to share with you some tools, some quick tools. We can look at this later on the Q&A also. So if you are going to do some trading on crypto, to buy crypto, usually you go to SEX. SEX is meaning central exchanges. And I would recommend Coinbase. Coinbase is the only central exchange that is a public company. So it's listed on the stock exchange, has a lot of regulation. Kraken is another US company that is very lot of security, very safe, where you can buy crypto there. Then you have the DEXs. The DEXs are a bit more complex. So you need to have a digital wallet, and you can buy crypto on decentralized exchanges. So these two examples are Uniswap on Ethereum network or Jupiter on Solana network. So Solana is also a very interesting cryptocurrency. And here you can exchange crypto with other crypto holders, okay, on a decentralized way. So it's a bit different. Then you have this kind of crypto banks. On crypto banks, you can have Visa cards. So for example, I have a Visa card from Nexo, another Visa card from crypto.com, and I go to the supermarket and I pay with these Visa cards. And on the other side, they are exchanging Bitcoin, Ethereum for euros to pay for the supermarket. And you can ask for loans, instant loans. You can put your Bitcoin, Ethereum, and get some interest for the coins that you have there. So they work like a crypto bank. Then you have the digital wallets, because we were talking about self-custody. So you can take custody of your own crypto, let's say Bitcoin, Ethereum, and you can have them on the central exchanges or on the crypto banks, but then you have the counterparty risk, or you can have it on your own digital wallet. So Ledger is an example of a hardware wallet. MetaMask is an example of a software wallet where you can keep your crypto and you are your own bank. So a lot of new concepts. Then we can try to go deep on the Q&A after.
That's great, Tiago. Thank you.
And finally, market data. So there are a lot of resources about market information. So CoinMarketCap and CoinGecko are the two main aggregators of information from the market, prices, news, a lot of things. So these would be the references, and I would suggest if you can circulate this presentation for the people that are here, if they want to look at this later, that would be nice. This is my last slide, and I need to find the charger for my mobile.
Well, maybe we can go to
my
Pedro.
PC,
maybe Pedro.
because I'm running out of.
Yeah, no problem. Why don't you do that?
Exactly.
Pedro can jump in with some of the taxation angles on this. Thanks so far, Tiago.
Exactly.
While you grab the irony of the electronic currency and needing to go get the charger has not gone unnoticed this evening. So thank you very much.
Thank you. Thank you.
Over to you, Pedro. Similarly, a cryptocurrency enthusiast, I believe. Are you there with us, Pedro? Right, we can see your presentation, Pedro, but I'm struggling to hear you so far. Perhaps
sorry.
Oh, there you go.
The mute problem, yeah.
Not a problem. So you were talking to me. I just couldn't hear you. Okay, fair enough.
You could not read my lips. Good afternoon, and to Expats Portugal, and thank you for the invitation to speak about crypto. Yes, I'm an enthusiast about crypto, but my knowledge is more on the tax side.
Right.
But I think Tiago gave us a very good perspective, and he has many hours of studying crypto. So it's very good to hear his angle and to understand about this. Regarding taxation, so have we gone from a tax haven to a tax hell? I think that's one of the big questions that are on people's minds. There has been a major change in December 22. So as of the 1st of January 23, there is a new regime for cryptocurrencies and for crypto assets in Portugal. But in the past, what happened is that because we didn't have any specific regime, Portugal, the regime was applying the same regime that it would apply to any other currencies. So, for instance, if I bought US dollars or pounds or Swiss francs And if I earned with that operation and sold it later and make a capital gain on that operation, make a profit, it would not be taxed. I did not pay taxes in Portugal. So I think Portugal has been looking at this a little bit like currencies. But from January 1st, as I told you, there's been a change. And sorry, let me just go through this. There's been a big change, but the major change is that they've started to tax crypto. But I think more on the professional trading side. So what do I mean with this? For short term, for people that hold crypto for short term periods of time, like less than 365 days, we are now facing the general tax rate that is applicable to other financial assets. So today I will focus on more on capital gains, but it's important to know that there are other two ways to earn money with crypto. That is mining and staking. Mining, as you know, is the operation with the computers that you validate transactions, and it's not very, as far as I know, is not very interesting activity in Portugal because of energy costs, so it's not very efficient. And I think it doesn't concern our viewers so much today.
Pedro, sorry, let me just interrupt for a moment. I thought it was just me, but Denise also has the same issue. The parts of your presentation are blacked out. So I don't know if you want to step back and forth in your presentation just to see if we can get rid of those black blocks that are they still seem to
you
be
cannot see it?
It's still on there. Can you reload it? Is that a possibility?
Yeah.
Just try a reload and then we'll see if we can get rid of those areas that are obscuring your information, basically. Thanks, Derek.
But you can hear me.
I definitely hear you, yeah. And of course, we can put, alongside Tiago's presentation, we can put yours into our forum as well for future viewing. But just to see if we can sort that out this evening, that'd be great.
Sorry.
That's not a problem. Don't worry. We do have some questions, so looking forward to sharing those with you. Tiago, are you plugged in now? Okay.
I don't know why it paused my. I don't understand why this is pausing.
Have I made it even worse now by asking you to do that? Perhaps I have.
Let me do, sorry. Am I more used to Teams than to Zoom?
We love them both. We love them both, especially when they're working.
Yeah.
We're just getting we're getting a share from you, but not anything on the screen at the moment.
Wait.
That's okay. Yeah, so get your questions into the chat if you will. It's a fascinating subject. While you're doing that, Pedro, I'm just going to go back to Tiago to ask a first question, which was it's a quickie, which might be quite easy to do while we're waiting for Pedro to bring the presentation back, and it was on the matter of the stable coin. As a total novice, if you buy something that is a stable coin for $1, for example, do you only achieve a profit from selling? But how does that happen if you can only buy $1? Is it volume rather than unit cost where the profit is made on a stable coin? And we'll need you unmuted for that as well, Tiago. Who perhaps can't even hear me asking that question there. We've been plunged into a major technical difficulty while we're discussing the most technological currency. Yes, we've still got the blocks. But carry on anyway.
No, but you can see the slides.
See the slide. There's a little bit of that blocking again, but let's proceed anyway because it's better than it disappearing altogether.
Sorry, I must make some kind of course on this to understand.
Yeah, I think everyone needs a Teams course now and then.
Yeah, sure. I was just telling that I will focus more on capital, on buying and selling crypto assets. despite the fact that Tiago just advised, in his opinion, you should hold it, not sell it. But I will focus more on buying and selling than on the mining or on the staking operations, because they are not so popular, and I think it does not concern so much our viewers.
Fair enough. If you could press presentation mode as well, that'd be great, because then we'll have just a slide.
Okay. It's okay?
That's it. That's it. That's as good as we're going to get, I think, Denise and Derek. But you're hearing Pedro's words as well, so we can check in with him if there's anything we're missing from the visual.
Yeah. So, and also I will focus on personal income tax, because as for businesses, it's taxable as any other profit in a business. So it's not so interesting to own crypto in a business. So let's just review. Let's give a step back to financial assets taxation very quickly. Now we have in Portugal, just to compare, to have an idea, because if you are choosing between investing in crypto and investing in other financial assets, so we have in Portugal the general tax rate of 28%. But recently in June, it was introduced a new regime for incentivizing long-term investments. So for assets held for more than 2 years and less than 5, this goes down. So there is this ladder. It goes down to 25%. More than 5 years, less than 22, and for assets held for more than 8 years, we now have 20%, which is more competitive tax rate in Portugal. You can also choose to be taxed in the aggregated income taxation, like as ordinary income, which will take you to the progressive tax rates, but I don't know anyone who has ever done it. But it's only useful when you have losses and you want to carry on those losses forward. So in Portugal, just to remember, the tax rates range from 13.25 to 48%, which are quite high. And on top of that, you still have 2.5% and another tax of 5% to income over 250,000 euros. So an investor that has already built up some impressive or working people that has a not common salary, not common remuneration, but a very high remuneration, you will pay 55.5% of taxes in Portugal, which is quite high. So what about crypto? As I mentioned, crypto in Portugal was treated in the past as an ordinary currency. It's like you were buying a dollar or sterling pounds. And there was no taxation if you made a profit on it. This has all changed. And now taxation will depend on these two factors, which are the length of time that you hold this investment, and whether the crypto asset is considered an exchangeable security or not. And I will explain this more in detail forward. So for crypto assets that you hold for less than 1 year, but the law is it's in days, so you must watch out for this. It's 365 days. You now have, and this is the major change in Portugal, that you now have 28% special flat tax rates, which I think of this as like the professional traders, because not many people adventure themselves in buying and selling or on such short-term periods. So, but if you do, you will face this taxation. If you have a loss, you can choose and you can carry forward your loss for 5 years, and also you can offset your other gains that you have in other financial assets with losses that you have in crypto. So this is interesting because in the past we were not taxed, but we could not deduct the losses. So. And now on this type of time horizon, you can take advantage of the losses. What about crypto assets held for more 365 days or more? Now there is this new approach that you have to see if they are considered exchangeable securities or not. And the big question is this, which ones? I think I've asked Tiago and I've asked other professionals that, or people that are used to study Bitcoin and or other cryptocurrencies, and they just don't know. It's not easy to classify some cryptocurrencies as exchangeable securities. One thing is for sure, ETFs. So if you hold an ETF that has some crypto on it, it's not the same as owning the crypto directly. So it will not be taxed in this regime that we are talking about here today. It will be taxed on the regime of the financial assets, which I've just showed you back there. So, and also there are some cryptocurrencies that have been classified as securities in enforcement actions, which include Ripple, EOS, Skin Token, so some minor cryptos that I personally don't know, apart from Ripple. But as far as I know, Bitcoin and Ethereum are still not considered exchangeable securities due to their nature. But Ethereum is, I think it's on the border. So it's, and the classification of other cryptos will depend. We'll have to see this case by case, and it will depend how this will evolve. So this is a dynamic issue. Myself, I don't have the experience, and I don't think that the Portuguese tax authorities will have the experience to catalog the cryptos as if they are this exchangeable securities or not. So you should study this issue very carefully and understand in the SEC or in wherever the crypto is being produced, which is decentralized, so we don't know. But it's important to study and to see how markets are considering this or not. So if it's considerable an exchangeable security, if you hold it for more than 365 days, in Portugal, opinions are divided. In my opinion, you will face a 28% flat tax rate. But there are colleagues of mine that believe that it is not taxable in Portugal if you hold it for more than 1 year. So prudently, this is my opinion, this is my disclaimer. I believe that it's taxed at a 28% flat tax rate. And what about cryptos that are not considered exchangeable securities? For example, Bitcoin. It's excluded from taxation. So like it was in the past, it's considered like any other currency, or for example, like gold. So if you buy and sell gold as a reserve of value, you will not be taxed. So and in the same way, you will not be taxed in crypto in Portugal. But the difference, and this is also a major difference, is that now it must be declared on your annual income return when you sell it. Okay, when you have a taxable event, which is when you sell it. Also, of course, that the downside is that the losses are not also deductible; they are not tax relevant. But you have the option to make these losses, to include these losses in your income return and to carry forward for 5 years. It's important to say that when you have losses from previous years that you want to use in a given year, you will have also to be taxed in the aggregated way, so with the progressive tax rates. So you cannot be taxed on the 28% for financial assets and then use the the losses of crypto that you had in the previous years. No, you will have to be taxed on all your capital gains. So if you have stocks or bonds that you sold and you made a lot of profit, you will have to be taxed on it with the progressive tax rates, so that you can use the losses of crypto to offset those gains. So I think you will have to be very well supported and to make your calculations to see if it's worth to choose to use your losses from previous years or not. Also, I would like to point out this rule, which is this heads up that is very important, that if one of the parties involved in the trade is not resident of the European Union or the economic area or a state with which Portugal has a convention to avoid double taxation, you cannot benefit from the 0% taxation. Okay, so just be careful with, if you sell in an exchange and the exchange is registered in the US or in the SEC, that's okay. But if you are selling privately to someone your Bitcoin and giving the code to someone, and that person is resident of one of these states, that nowadays these states are, these geographies are less and less a reality. But just be careful with this. Also, another rule that this has never happened in Portugal. It's a kind of an exit tax. So if you are a resident, and I think for our viewers this is important, because you are maybe living in Portugal or thinking of coming to Portugal, and maybe in a few years you are thinking of moving to another country. Hopefully not. But in that case, if you lose your residency, it's considered the same as if you sell your crypto assets, which will result in declaring a sale. So you cannot, you maybe you are not taxed because you hold your assets for more than 1 year, but maybe you can be taxed if you if you are holding your assets for short term. Also, one particular characteristic of this new regime that I didn't talk to you about is that if you have crypto for less than 1 year and you need to sell it because you think the price is very good and you don't want to wait for another year, but you don't want to be taxed, you can convert, instead of selling crypto into fiat money. As you know, fiat money is our traditional money, so US dollars or euros. If you convert it to stable coin, which is also crypto in the sense that it uses the blockchain technology, decentralized, and it has a stable, it's indexed to coins like the dollar. So if you convert to stable coin and wait for the amount of time necessary to get the 1 year exemption, you can do that, and then you convert your stable coin into any assets or fiat money. Also, if for example, if you buy a house with your crypto, which is now possible in Portugal, that's also a way to sell the crypto, because you are exchanging your crypto for an asset. So it's considered the same as if you sold your crypto.
There are a couple of good hacks there. That's very interesting.
Yeah. Also, why do we have? Because many people think that crypto is something that the states, the tax authorities do. It's difficult for them to know about this, and many people go to crypto to avoid taxation, or they think it's less transparent. First of all, I don't believe in that, because I think, as you are aware of, the crypto lives, the blockchain technology leaves a digital history. So it is possible to track down all the transactions in operations with a certain crypto. So if as opposed to traditional live money, cash, that you cannot do to know what you do with it. But at a certain point, you might want to buy a car, an expensive car, or a house. And over some certain amounts, for example, for a car, I believe that it is 50,000 euros, or for a house in Portugal is 250,000 euros, which nowadays gets you a 1-bedroom or 2-bedroom apartment, because the prices have been peaking. But when this law was done, it was not like this. But if you buy one of these assets, it triggers an evidence of wealth, and there are mechanisms in the tax authorities to make sure that if you don't have income declared that can justify that evidence of wealth, you will be notified to justify how you had that wealth to buy that asset.
Wow.
And if you declare this, it will help you a lot, because you are already declaring what you sold and you are not being taxed, so that there's no consequence on that. Also, I didn't write this on the slide, but it's also important. If you are going for a loan, and if you have already this proof of income in your income statement, annual income statement, it will give you more power to negotiate loans, because you show that you have more wealth than if you don't declare it. Also, because this is a worldwide issue, it's not Portugal. So there are, the same way that after the 9/11, there were these CRS frameworks that were put in effect, that all the banks worldwide have to report, apart from some sinister geographies, but all the states and all the banks have to declare to the residency states of the account holder, that have to declare that he has an account and what operations did he have in a certain year. And this is now being transferred also to the crypto world. So it's called the CRS or CARF. And Portugal is in this collective engagement. So nowadays, I know that is not in effect, but in 2027, it will be in effect. So there will be an exchange of information. So this the wallets and the exchanges that Tiago was mentioning before, they will have to report who holds their cryptos and what transactions occurred in a certain year. Of course, if you ask me, I believe that they are not prepared at all for this. So they are prepared to give information to the users about their performance and the performance of the market, but they are not prepared to have this compliance burden on them. But they will the same way that banks already have this, and that's why we pay so high commissions to the banks, because they have to pay for this compliance and for this. So also an advice is that one keeps a detailed record of all transactions. So I think print screens should not be enough. I think you should really print from the exchanges or the wallets where you have your crypto. You print your operations and you keep those PDFs with you stored for when you have to justify. For example, if you buy a house nowadays in Portugal, you will have to justify when you bought the crypto and when you saw that you are using to buy the house. So you will have to show all those movements if you want to use crypto in a deed to buy a house nowadays in Portugal. So I think that's it. This is my last slides.
Thank you, Pedro. Okay, very interesting, the tax aspect there. And basically, it sounds like it's a good idea to take Tiago's advice and hold it. So you don't get involved in all of that you've just gone through. Another good reason to hold there. What I'm going to do is I'm going to stop the recording there because it's been a lengthy presentation or two presentations and a lot of useful information for anyone interested in learning more about crypto. And I'll ask that people check the forum. If you're watching this, thank you for subscribing to us on YouTube. And if you're watching this, join Expats Portugal and you'll get access to the presentations in the forum as well, where they'll be put. So for the time being, thank you, Tiago. Thank you, Pedro. Stick around, though, because we're going to ask some questions from the members who are here with us on the Zoom call tonight.